everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at the S&P 500. Now, the S&P overall has been in a range for the last day, and really not much different has really happened. We had the big gap down leading into some pretty back and forth kind of gross movement, and for the most part we really weren't able to get out of that range. Right? We had the overall range highs forming here, small little range low that widened out to right there, then that widened out to right there. You kind of get the idea. So by the time we come in at 8 o'clock, we have this really wide range kind of working its way across, and at that point in time we're pushing into the highs. Now, we are cycling in off of a very large leg to the upside, and the anticipation is that if the buyers are going to take this, they're probably going to be going for an ABCD type correction to get up into 60-minute resistance. That's really the only reason why there are some buying opportunities here, mainly just to finish off those moves to get to that 60-minute objective. So we have a big burst to the upside. Buyers are going to be very anxious to be buying in. They may have missed a buy right there. Maybe they were too nervous there. They're not going to miss the next pullback, and that allows for a quick scalp to the upside. And that's the important thing to remember here. When we're in a range, we're looking to buy low, sell high, and right now we're at the highs and we're buying. You can sometimes get away with that if you're only looking for really small targets. If you're looking for quick little scalps, nothing much, in and out kind of moves. But when you get to the highs and you're looking to sell, that's when you start looking for the big moves. There was a quick little trap low for another potential scalp to the upside to finish the job off, but we pushed up to the highs, we get that close outside of it, and immediately it fails back down. And that is a big clue that we are dealing with a twin reversal top, and that allows the sellers to begin selling the highs of the range to drive the market down. And this is the difference between looking to sell the highs of a range and buy into it. You're buying into it with tiny little scalps, and you can sell off the highs for some big drops to the downside to catch a bigger piece of the move, right? Nice little channel low test as a target. You name it, you pretty much hit all the targets there. And just a phenomenal day of overall price action when it comes to ranges. Even though it was very slow today, you definitely had to hold on and maintain some patience. If you made that patience kind of stick and work with you, you probably had a pretty good day. Now, if you were in earlier in the session, obviously there were a lot of range trades that you could have been playing off of on both the highs and the lows, but we come in at 8 o'clock, and that's really about all it gave us, was that nice little attempted scalp to the upside, another scalp to the upside, and then a range fade right back down to finish the day off. And that's really the big thing to remember with ranges. Breakouts, doesn't matter how big the breakout is, it's likely going to fail. Most breakouts of any type of range or any type of consolidation are going to be failures, and especially when they're going against the overall trend. We have, if we zoom out, a nice move to the downside after failing off of the top. We drive down, we start grinding lower, the buyers try to break out of the highs, not very likely going to stick around when you're going against that big of a move down, and you get a collapse right back down. So a great combination of technicals along with market psychology. Hopefully you learned something, hopefully you found it interesting, maybe a little bit entertaining as well, and we'll see you all next time.